All right, let's just jump right into it. If you've been keeping an eye on the stock market lately, you've probably been scratching your head, right? It's been acting, well, a little weird. The Dow Jones seems to be moving on a whim, and it's created this huge puzzle for just about everyone. So, what is really going on?
And that really brings us to the core question we're going to tackle in this explainer. Normally, we expect things like company earnings reports or big economic data drops to be what move the market. But right now, it really feels like the market has just torn up the rulebook and is playing a completely different game.
So check this out. This slide really lays out the big shift we're seeing. On the left, you've got your classic traditional drivers, the hard economic data, the company earnings. But honestly, they're not in the driver's seat right now. Instead, you look over on the right, and the market is hanging on every single geopolitical headline, especially the tensions between the US and Iran, and how that immediately impacts crude oil prices. And here's the crucial takeaway, boiled down to one sentence. We're in a moment where the feeling, the sentiment that comes from a news alert popping up on your phone is way more powerful than a spreadsheet packed with economic data. It's a market that's running on instinct and pure reaction.
And here, we can actually see the play-by-play. It's like a chain reaction. First, the news breaks. Then, almost instantly, oil prices react. If there are fears of conflict, oil spikes. If there are hopes for peace, oil falls. And from there, the Dow just follows oil. It's a direct, almost mechanical link. It's kind of fascinating to watch.
Let's break that down even more simply. You can see this perfect inverse relationship here. You get a headline about escalation or conflict, bam, oil jumps up and the Dow tends to fall. But the second you hear even a whisper of peace talks or a ceasefire, oil prices start to relax and the Dow pushes higher. It's that black and white at the moment.
So traders actually have a specific name for this kind of environment. And what they say is, this is not a clean trend market. In other words, you can't just look at a chart, draw a neat little trend line, and expect things to continue. No way. It's choppy, it's unpredictable, and it's all about these sudden, sharp shifts.
So let's put a proper name to what we're all seeing. It's what's called a reaction-based market. And the key thing to get from this definition is that news isn't just one of the factors in play. Right now, for all intents and purposes, it's pretty much the only factor driving this wild, unpredictable behavior.
Okay, so what does this all mean for you in practice? Well, it means that day-to-day unpredictability is just the new normal. You can see a stock absolutely soaring one minute, only to have a single headline completely reverse its course the next. In this kind of environment, believe it or not, your news feed is actually a more powerful trading indicator than any formal economic report.
And all of this leaves us with one last, really fascinating question to chew on. When you have algorithms and traders reacting to a headline in milliseconds, way before the real-world impact is even understood, what is the market actually reflecting? Is it really predicting the future, or is it just showing us a high-speed digital reflection of our own collective anxiety? Something to think about.